Welcome everyone to this month's webinar. It's a VIA member exclusive first up, although we will put this on our YouTube channel later in December so that a bigger audience can get to learn everything they need to know about the value of a gram. We have talking to us today Dave Boot, who runs an empire down in Christchurch. He has EV City, his EV sales yard, and he also runs the Carbon Trading Company, which is a carbon credit trading platform. I'll let Dave talk more to who he is and what he does. I'll just ask that we shut our microphones off and cameras off just so that it spotlights Dave as he talks. We'll have Q&A at the end. So there is a Q&A function here that you can throw a question into, or otherwise just hold on to your question until the end of the session and we'll address those. I'm going to be presenting the slides off my screen, so we're going to see how this works with Dave talking and me presenting. There'll be a little bit of some nodding and winking as we try and get the timing right with everything. But I'll share my screen now.
And thanks for the introduction. I suppose the cat is out of the bag now, in the sense that, yes, while I am the creator of the carbon trading platform, the need to create the platform was spurred by the fact that a few years ago I was reading through the CCS legislation, and I actually have read the entire document, which is why I'm so absolutely enthralled and bored by it at the same time, but realizing that it was becoming a significant threat or opportunity for my business. Because of the value of what these fines were. So EV City was something I started 6 years ago, and we are a specialist EV only dealer. So we have credits in abundance to sell or trade. And that perked my interest significantly when I saw on that platform, saw in the legislation that that trading was going to be obviously allowed. But yeah, thanks to Greg and the VIA for letting me speak to your membership today. It is a privilege to look at some of the names on the call and see my name as presenter to you guys who have been in this industry for a great deal longer than I have and know significantly more. But I do spend far too much time thinking about CCS CO2 credits and how they are implemented in business, how dealers are using them, because I have a vested interest in understanding how other dealers in the network, people who aren't specialist EV dealers, people who are specialist EV dealers, and people who are fruit salad dealers, how they are playing the game, if you like. So very quickly, because slides are incredibly boring, Greg and we're going to run through a few slides very quickly to show you how the carbon trading platform itself works. And then I want to get into the real crux of it, the meat of it, and discuss with you guys and gals, Marie, how you are using or how you are engaging with the CCS, whether you've thought about it as much as perhaps I have, and whether you're accounting for it in your balance sheets. So Greg, if you wouldn't mind, just give us the first slide and we'll whiz through those really, really quickly. If you sign up to the Carbon website, and some of you on the call have, this is a simple landing page which will get you signed in, get you an account so that you can begin trading. The unique and interesting thing that we've discovered setting up this platform is the AML requirements are significant, and great expense has been spent realizing that we are effectively, or the carbon trading platform is effectively a cryptocurrency exchange, or that is its most similar counterpart. The reason we require all of our customers to be AML verified, just the same as NZTA CCS CO2 account holders are, is because we hold in trust credits on behalf of sellers and cash on behalf of buyers. The platform is a secure site in the sense that if you wish to sell credits, excess credits on our site, you first must bring those credits into our platform so that we acknowledge they actually exist for the protection of our buyers. And Greg, that's a good one to go to the next slide, please. Once you're in the carbon platform, you're presented with this as your landing page, and right across the top is the thing we all here to discuss, and what we most often want to know is what is the value of a gram? What is the price of a CCS CO2 credit? And what you're looking at there is a used pay-as-you-go price. So you have a nice candlestick graph there over the last couple of years since June 2023, showing trading volume across the bottom. And really interestingly, we can see when trading volume is high, price is low, and as volume decreases, of course, price skyrockets. So the platform exists where people have a wallet, as you'll see on the bottom left there, where people can deposit credits, deposit cash. So a buyer will come and see a group of credits he wants to buy for maybe $4,000 or $5,000, and know that before purchasing those credits, he has to go into his wallet and add those credits. So just jump on to the next slide very quickly, Greg. I'll give you an example of what it looks like for someone who is depositing credits into our wallet. Obviously, credits don't exist outside of NZTA's or Wakatai's CCS CO2 platform, so Carbon has its own credit account, which we require sellers to bring their credits to. Your wallet then gets updated to show, yes, we acknowledge we have receipt of those credits and they are in your wallet to sell. When we acknowledge them, you can create classified listings for them. And this has been one of the most interesting things, is to understand how dealers have tried to group their credits and then charge an appropriate price for that. There is one dealer on our platform that understands that a lot of customers are out there looking for about 40 to 45 credits on a one-off basis to simply register a certain type of car. And I haven't been able to work out what type of car that is, but he puts those credits amounts in small groups at a higher price, whereas we have other dealers who come to the platform in bulk and list 1,000 or 2,000 credits at a time for a slightly lower price. And the neat thing about the marketplace, and the main reason we wanted to create it, is to establish what the trading price is of a used CCS CO2 credit. Before Carbon was live and before we had trading volume, which gave us an average price, some of you may have been aware of the email threads that were bouncing around our dealerships with over 200 addresses in them. And when someone would say, "Hi all, I have 1,000 credits to sell," and someone would hit reply all, suddenly would have an email thread 8 or 9 emails long, and you wouldn't actually understand who was offering what to who. It was an absolute real mess. Then there's also the trust issues of dealers and perhaps Invercargill trying to buy credits off dealers in Auckland. They don't know each other. Who pays who first? Who deposits the credits to who first? So on the Carbon exchange or on the Carbon platform, you have to bring your credits to the platform first. We acknowledge that they exist, therefore the buyer can have confidence in the fact that if they do bring their money to the platform and pay for those credits, then they do exist and they'll get those credits issued to them immediately. Next slide, please, Greg, and that'll just show you if you're, again, if you're a buyer, how you deposit New Zealand dollars into your Carbon wallet. So again, from a seller's point of view, we want to prove to that seller that if we do create that sale for you, then that buyer has already fulfilled their obligations to buy, that money is in there. Quite interestingly at the moment, because between when it's a B2B exchange, GST does apply. So in that instance where someone makes a classified listing for 150 credits at $13 or so and sells them, the Carbon system acknowledges that we need you to invoice us for those credits, and we buy them and sell them on to the next person at that exact price, simply so you can get and we can issue a GST invoice. Next slide, please, Greg. We're whizzing through them at a great rate. This is what inside a customer's wallet might look like. Down the bottom there, we can see transactions. We can see sell transactions. This person has sold transactions in groups of 200, 301, 500, 300, and 150. The associated amounts next to them. And at the top there, a withdrawal where that customer has then said, now I want to withdraw that balance of $14,186. Obviously, if you're bringing 2,000 or 3,000 credits to the platform, there may be very limited amount of buyers that can actually afford to go into or need to buy as many as 2,000 credits at one time. And so some of our sellers have found, as discussed before, that smaller groups of 45, 150 or so suit different buyers who are sometimes in the queue at VTNZ ready to register that car and quickly need to go and satisfy their NZTA account to make sure they can register that car. It's not compulsory, obviously, for dealers to withdraw their funds each time they sell a patch of credits. And we have some dealers who drop credits into the platform on a Monday, sell through Tuesday to Thursday, and make a withdrawal at 3 o'clock on Friday. And people have got into a nice rhythm of that. Greg, if you can give us the last sort of slide on the Carbon website, just so we can discuss where the price is at the moment. And the last time I took a snapshot of our website, we can see the price there at $16.10 for around the 1st of October this year. Quite high and significant when you consider that the fine cost is $18, and there they are, you're not saving much at all. Well, just yesterday on the platform, in fact, this morning credits were sold at $17.50. So people are saving 50 cents a credit, and it's still worth saving the money if you've got to buy them. Back on to the next one, and we'll discuss what I'm really here to discuss, and what I will actually ask you to give us feedback on in the end is talking to dealers. I've discovered that a lot of them, a great deal of us, aren't doing a great job of recording how we are purchasing or using even our own generated CCS CO2 credits. So an example there, a very rough example, I may not have the weighting average correct on this, but a 212 CX5 emitting 171 grams needs 58 grams of carbon to clear that so that you can register it. Now, no one's probably going to have 58 grams of carbon available of CCS CO2 credits available on one package. So you might need to go on and purchase a slightly bigger amount. And in this example, if you purchase 300 credits at $15.50 each, then if you allocate 58 of them to this car, it's going to cost you $905 to register this car. And my question when I've been presenting this to groups is, as a dealership, how are you allocating the cost of those credits you have bought to that car? Now, many of us in our dealer management systems, we are always recording the import cost of the vehicle, freight, GST, EBS, heat treatment, and then when it arrives, we're recording the costs of compliance, tyres, paint and panel repairs, grooming, audio upgrades. When we sell the car, we're also attributing registration fees, perhaps road user charges. Where are we allocating those CCS CO2 fees? It's perhaps not correct to bring them in and allocate them as reconditioning, but that's effectively what they are. If it's costing $905 to register that vehicle and you're not recording it in your database, in your DMS, sorry, then at the end of the month or year or however long you take until you review your statistics, are you actually aware of how much you are making out of your CX5 sales? Do you look at your profit and loss report and think, God, those Mazda CX5s are really working well for us. I'm going to go to Japan and target a whole lot more of those. Or are you oblivious to what the CCS CO2 fees are because they're not recorded with each sale of each vehicle? And for many of the dealers I speak to, they're using Motor Central as their DMS, which doesn't make it easy to record CCS CO2 costs, but they're using Xero to record the cost of those purchases. So Motor Central profit and loss report will show you ripping along, having a great time, and then your Xero report at the end of the year or the end of the month might show you as not doing quite so well, and you might get quite a surprise. And what surprises me in a big way is dealers approaching me and saying, Dave, I need 10,000 credits and I want to pay this price because I've got a phenomenal amount of cars I've just sold and I need to register them all. And what surprises me about that is the lack of perhaps forecasting or foresight into securing credits at a reasonable price, or even understanding what your credit acquisition price is, so that you can use that information to factor in the correct pricing of that car when you're buying it in Japan. Obviously, you don't want to let the tail wag the dog, and you can't sit there in Japan saying, well, I can't afford to buy that because, the CCS CO2 credits are too high and I'll never be able to sell it for a profit. I mean, if you don't have it, you'll never make a profit. But I am surprised to see people still on their knees under the cars, checking the condition of the tyres and the paint and panel, and having actually no idea what it's going to cost them in CCS CO2 fees to register that car. And certainly now, when we move into a time when at the moment the fine cost, if you have to buy those fees from NZTA, is $18 per gram for a pay-as-you-go fine. When next year we're going to 27, I wonder how many dealers and how many importers sitting around the call today are hoarding credits, have put away enough credits to help them become more competitive in the early moments and the early months of next year, by being able to sell a car at a lower price than their competitor at a more profitable profit margin because they've considered and pre-purchased those CCS CO2 credits at a better price. In this example, you've used up 58 of those credits. You have 241 of those credits still available, which you'll no doubt use on other cars. But until you've used them, where do they sit on your balance sheet? And on that note, if you are a generator of credits and you do not use them at all yourself, and you bring them to a platform or sell them to a friend of yours sporadically, when it comes time to the end of the year review, have you told your accountant about these CCS CO2 credits? What have you told them is the value of those CCS CO2 credits? How are you actually accounting for the sale of them? What I'm seeing is a lot of dealers, well, a few dealers, who think the easiest way to attack the problem of CCS CO2 credits is to bring in a few cars that they wouldn't normally sell, a few low emitting or zero emission cars from Japan. And that is satisfying their need for CCS CO2 credits immediately because the credits are issued the moment the vehicle's complied. But a lot of dealers are coming to me and finding out that that is a short-term solution because that ties up some cash flow. And 3 or 4 months later, when you realize that, geez, those EVs are actually quite hard to sell. And even though I'm putting them out at cost price because my only interest in these vehicles is actually gathering the CCS CO2 credits, I'm actually tying up a lot of my floor plan or a lot of my own cash in these vehicles which are very slow to sell. 375 Nissan Leafs for sale on Trade Me as of yesterday, and apparently about 60 or 70 of them are being sold per month. So we do have some excess supply at the moment. Just quickly onto the next slide, please, Greg, and then I'll open up so we can have a discussion of I really want to understand from people, what are they doing with their CCS CO2 credits? I understand there's about 1.5 million used CCS CO2 credits in customers' wallets unused. Is that because people are wondering what's going to happen next year? Are they banking them for their own use? Or are they bringing them into a marketplace where the price, as we see, goes from used credits being $18 this year, increasing to $27 next year? And are they forecasting, and I suppose therefore speculating, that the price of those credits could be considerably higher next year? Now, as we can see on our candlestick graph from the page a few slides ago, we're getting $17.10 and $17.50 today for credits, 98 cents in the dollar, really. So if if an EV dealer has attracted 138 credits per Nissan Leaf this year, what value is there in him selling them this year? And why might he not hold on to them until next year when he could get as high as, and my prediction is, the starting price will be around $22 to $24 per gram. So everything going up 50% next year. And what's really interesting, and no one can really confirm this for me, is where some pressure alleviation might come from is the fact that in 2026 is the intention to have new and used credits become interchangeable. As we all know, new credits are twice the value or twice the cost of a used credit. So the formula the NZTA is no doubt working out is that 1 new credit will equal 2 used credits. Therefore, a dealer that needs used credits could come onto our platform and buy 1 new credit, and that would then translate in his wallet into 2 used credits to satisfy his needs. Emissions targets are slightly easing next year, but I want to talk to the fact that as each year the credit limit or the grams of CO2 permissible per kilometre travelled reduces, that creates a double-edged sword. Not only are there less credits in the market, there are less credits available in the market. So the drops, while they go from 112 to 108, might not seem significant. If I'm only getting 108 credits, you need an extra 4. I'm getting 4 less than I was the year before. So actually the magnitude of credit, I suppose, delta there is a factor of really 2. We have less to give you and you need more of them. Now we're passing from 18 to 27, and furthermore, credits are going to have a 4-year lifespan. And if my credits that I'm generating 138 of them per Nissan Leaf this year, if I can hold on to them, if I have the cash flow reserves to hold on to them for 2 or 3 years, when the targets are reducing and reducing and dealers are getting less and less credits and needing more and more credits, what might they be worth then? So it strikes me that there's an awful lot of opportunity for dealers, for smart dealers, for well-heeled dealers to get in there and really gamify the situation and effectively own the market, and unfortunately set the pricing for the next few years of what CCS CO2 might be. And on that note, I'd really like people to sort of turn on their microphones, perhaps, and Greg, if you want to facilitate it, perhaps put your hands up one at a time, to come through with any questions or any suggestions, or perhaps even any comments on what you yourself are doing as a importer or retailer, what fears, concerns, or questions any of this raises, and how many of you are sort of aware of, of what you're doing in your own dealerships or in your own businesses for recording the cost or the value of those credits as you buy and sell them against the vehicles. Really, so you're in a position so you're aware of which vehicles are good to target, where your profit margins are actually being made, and where your profit is actually hiding from you. You may be looking at the wrong type of vehicle, thinking you're making a great deal out of that one, when really it's being afforded to you by another vehicle, which you're not, I suppose, actively penalising for that credit. Furthermore, I'm not sure if there's anyone on the call that is involved in a multi-dealer sort of situation for news, where you perhaps have a multi-franchise situation. I'm aware of some where, for instance, the Atico group is gathering, no doubt, a whole lot of credits through the phenomenal sales of BYD, but needing them for Jeep Alpha and the other brands they have. And I wonder, in that sort of situation, what they're doing internally with those credit values as they use perhaps some of those credits they've got to assist other brands. If there are people in those dealerships that are responsible for the financial performance of those brands, at what value, if indeed any value, are they transferring those credits across within their own house? So do they actually understand how much some of those higher emitting brands are actually making for them? Or is that being hidden by the fact that they've got a great electric car which is selling in great volume, and they're using those credits as free? Now, I don't mean to use them as an example, but they're a great example because obviously BYD sales are so significant for them. But it does make me wonder as to how they're attributing the cost of those across the different brands to actually understand what is profitable and what is not, and how they're able to price those vehicles accordingly to be competitive with other brands and with their competitors. So, Greg, if you can facilitate to us, if this is for us, if anyone's got any questions or comments, or wants to point out any factual inaccuracies, I'd love to hear from you.
Yeah, I'll stop sharing the screen, and so we can go full screen. Thanks, Dave. And I think, you know, the reason I wanted you to come and talk to the membership and bring this up again was, having heard you talk about this before, I think it's really important to help businesses understand the need to come up out of the weeds from time to time and look at the big picture and look at what's going on, because it does feel like there is that situation that people have gotten into of playing catch up with they've brought this many cars in, and then suddenly they're realizing they're needing credits, or credits would be useful to help with offsetting. And so they do seem to be playing a bit of catch up. But if you've accumulated some credits, again, it's looking out over the next couple of years and thinking, what's my best strategy for using these to my advantage over the next couple of years. Yeah, we've got the interchangeability of credits, which frustratingly NZTA have scheduled for 2026. We don't understand why they can't do that any earlier. Not just us at VIA, but our friends at MIA, the new car importers, OEM representatives. We're both asking the question of NZTA why this can't be done a bit sooner. As you pointed out, the calculation's not that hard. So why is it not doing that? But also the extension of the lifespan out to 4 years, which means you're going to have a bit longer to play with these things and need to be thinking out. So this has been really, really great to have that. As Dave has said, we're open to getting questions from anyone about Basically about anything. It could be about the way they've set the platform up and how those prices have been changing over the year. It could be how we'd love to hear how you're playing around with your credits. What are you doing with them? How are you using them? How do you see the strategy going? Marie, great to hear from you. Oh, do we need to unmute you? Oh, allow mic. There we go. Sorry.
I think you may have just muted her.
You allowed the mic. Now she needs to actually unmute herself.
Yeah. You try it. You should be able to unmute now, Marie.
Okay, can you hear me?
Yeah, there we go.
This is probably a silly question. When the lifespan expands to 4 years, is that going to include everything from previous years, or is it going to be at one set point going forward?
This might not be best answered from me, but I understand that it's for credits available in your wallet now will have a 4-year lifespan instead of a 3-year lifespan. So anything you're sitting on at the moment, now please don't take this as gospel, Marie. You might need to seek advice where possible, but that's what I understand, that credits available in your wallet now will have an extra year before they expire. So yeah, that is perhaps a hugely interesting idea here, is that people who have and can afford to hold on to them will be in a significantly better place. And as those years go by and as those limits reduce and we all find it tougher and tougher to bring a car to market which people want and people can afford, those who have got those credits well ahead of time can then price their vehicles with a lesser CO2 component to it, will be able to sell their cars at a better price and be more profitable.
Right. Thank you.
Thank you.
Yeah, just to add to that, our understanding is that the extension is on existing credits, so it's basically all existing credits extended out, and then any new credits that are issued having a 4-year lifespan. It's interesting to see how the industry splits out. MIA made the request for the extension, and we had no issue with those extensions being given. We asked for the interchangeability of credits between new and used, because we wanted to make sure that the market was flexible and liquid, and that if these credits are, apart from having just the difference of a 1 to 2 value, there should be the option for everyone to trade them however they exist. So real good example of how the industry's come together to try and build a better system that the government's put in place.
And perhaps something I've learned, if I can add something to the conversation, something I've learned over the last few weeks is that while we're all very capable and qualified car dealers, this is a unique and new part of our businesses that we are all having to learn from scratch. What I found fascinating is the number of people who are not car dealers who are approaching us asking for accounts so that they can buy and trade CO2 credits. Now, these people are sometimes hedge fund managers that see the opportunities of potential price rises, obviously, being able to buy in a price where, in a market where, earlier this year, we had credits as low as $5 in the middle of the year. Now, imagine if you'd been able to buy all those credits at $5 and hold them for 4 years when the price went up to, who knows, 26, 27, near $27. And you might not have even needed to wait that long to get to that price. Now, it's Carbon's plan to block any speculator, because we don't want to open a marketplace up where we're now hamstrung by a few well-heeled, smart businessmen or women that have got in there and owns the credit market and therefore establishes themselves in pricing used vehicles for the next 3 or 4 years. But it shocked me that people were interested and saw the opportunities. And I thought that that's something that we need to be really aware of, that other people see this as an opportunity to make better profit margins in the future by being able to grab credits at a fair and a better price in the past. So it's something I wanted us to all be aware of and be thinking about, as to how do we use this best for ourselves and for our own businesses. Because if we let it pass us by and we're always buying credits in arrears, we'll always be, really fighting for margin.
Oh, Malcolm's got a question.
Yeah, it's not a question, Dave. Really, it's an observation that what I'm getting out of this is that you really need to be talking to your accountant about how you run your business regarding the credits and how you account for them, where you put them, and is it going to be a profit station, or is it going to cause losses? And you do need to actually talk to your accountant and work out with them what is going to be best in your situation.
Yeah, absolutely. I mean, when your accountant's doing your books, do they have access to your NZTA CCS CO2 account? Do they know that that's actually an asset? Or do they know that that's actually a potential, it's a liability? And there will be companies, and I'm absolutely no doubt none of them are on this call, but there will be companies that are, that are wound up and put into liquidation, and the debt is far higher than first thought, because they've sold or used all their credits, and a liquidator comes in and goes, I've got these cars, and I need to sell them for this price, and then comes to sell them and goes, oh, actually there's this whole extra cost that we need to actually pay to realize these losses we already have on the books. The losses are far greater than we thought. And that's something for, I suppose, importers and people out there offering floor plans, is to understand what sort of leverage or what sort of debt levels your customers are potentially now getting themselves into. They might owe you $10,000 for the car, but it might also cost them $1,200 to register that car. So you're sort of familiar with what debt levels you're allowing your customers to get into, and being sort of mindful of the fact that if you did decide to go and actually claw that car back, if that business failed and you thought, well, I better go and get that car back and sell it, there's also that other debt or that expense that you need to realise before you can liquidate that asset. But yeah, you did right, Malcolm. Having a chance to talk to my accountant midway through earlier in this year, their first question was, what are these things? And what are they worth, and how do you decide what they're worth? And you've got some unsold ones. Where are we recording them? They're an asset. Yeah. Well, what are they worth? Depends when I sell them. And when I do sell them, quite differently from, or quite opposite, a dealer that needs to buy them and allocate them into their DMS. What if I bring in a car and sell it at cost, but I haven't really sold it at cost because I've got this value from the credit which I've sold? How do I bring that into my DMS so that I actually understand that buying and selling cars and making no profit is actually profitable? So how do I record that? But yes, absolutely, it's something that very few of your accountants will be aware that this has a value.
Yeah, no, and that just goes to that whole aspect of really need to understanding every part of your business and how the different parts interact, and working with your accountant. They might not know much about the vehicle trade, but they'll understand and help you understand when you're building up liabilities and what's an asset and to your business and what's not, what's becoming a risk. Plenty of smart people on the call who I'm sure have some good questions. Hopefully I've been through and I've allowed everyone's mics now, so you should be able to just unmute if you've got a question for Dave or a comment on how things are going. Adam, yes, please.
I was just wondering if the expiry date of credits is shown at all when you're going to purchase them. I know it's like still a few years away, right? But if a credit's been generated now, it's got a 4-year lifespan. If it was generated a couple of years ago, it's only got 2 years left. Like, so the price should be different for those 2 credits. I don't know if your system allocates that or.
Yeah, absolutely. Because we need to actually understand whether you're and what we call them expire 2026 or expire 2027 credits at the moment, because that's the sort of the credits we're dealing with at the moment. But yeah, it's absolutely relevant. And Adam, thanks for bringing that up, because I've got a note here saying don't forget to tell people about the fact that the credits they're holding on to might fall off the face of the earth in terms of value come the 31st of December one year when they expire the next day. And you're still holding on to 1,000, and you find a buyer and they're like, oh, I've got a credits which expire tomorrow. I'm like, well, I'll give you 50 cents for them. So there has been, and we've found forecasting what we think will happen. We've come to the conclusion that credits expiring end of 2026, which will actually push on to 2027 with this change to 4 years. If you haven't sold them mid 2027, good luck. You're selling for people who really need them and really need to cash them up or use them to expunge that credit value immediately. But as we move into more, and I think we will move into more people forecasting the value of that credit, which have a longer lifespan, will have a higher value because it can get you through more significant reductions in allowable emissions. So it's not just that the price has gone to 27 and that's it. There's going to be less available and more required as we go on. So the value of those will get closer to that $27 limit. Bear in mind, of course, they're never going to become worth more than that, because you can just go to the government and pay your $27 fine. But if you can get them at 26, 25, anything less than that, it's a significant benefit to you.
Well, that's really interesting. Yeah. Thanks for the question, Adam. And it makes me wonder, because I don't know enough about the system. So the credits themselves, you can figure out which ones expire when they go into the wallet. Do they just sort of float around in a big pool, or you're able to actually sort of say, I need the ones that are going to expire first to come out, first in, first out?
That's how NZTA's system works. When you come to sell on our platform, the first prompt there is, what is the expiry date of these credits, so that we understand which ones you're selling. But yes, if you are self-absorbing, if you don't use our platform at all, and you've generated some credits and you go to use them registering another car, your oldest credits are used first.
Okay. Cool.
It's a real trap for young players who perhaps are buying late in the year and thinking they'll hold on to them for a few months, and not realizing that, actually, these are done tomorrow.
Oh, yeah. So a December 2024 credit is going to expire.
We're not at that place yet. We're going to be 3 years away from those credits, credits generated in 2023, when they are actually done for at the end of 2027. But you're midway through that year. If you're that year preceding that, if you're holding on to those older credits, they need to be sold or used. Obviously, the best way of using your own CCS CO2 balance is to absorb it by buying a car or importing a car which can use those credits, because then you are getting $18 of value worth of that credit that you've generated. But as most of us have, we've specialized into our own niches. There's a dealer in Christchurch selling predominantly diesel vans. He every now and then sells Nissan Leafs, and they sit around for 3 or 4 or 5 months because he's not a specialist in that area. Tremendously good if you want to buy a van, but I think specialization has kind of kept us in our own lane. We do what we do. We are known for what we sell, and being a fruit salad dealership, while it's perhaps the best way to use your credits, it's a difficult. It raises other questions and other problems when you have a lot of your floor plan or your cash tied up in credit and value of cars that you're not necessarily comfortable selling. You don't understand the product very well. For instance, me starting Dave's Dirty Diesels to get the full value out of my credits would be a horrible mistake.
Yeah. We're coming up on 1 o'clock, so only a couple of minutes left. Just open it up, just if there's any more questions, any more comments. You know, it's really good to be sharing our understanding of the market and how we're working the market ourselves. If there's any other comments or questions for Dave.
And if there aren't, just thanks Marie, Malcolm, and Adam for asking those questions. If there are people sitting on the call that have something they want to say or ask or suggest or speculate on, but don't want to put their hand up here and sound stupid or give away an absolute nugget of a piece of advice or an idea, please get in touch with me. I would love to hear your ideas. Love to see and understand how you're using it, because with 1.5 million credits sitting in wallets, I can tell you that the market is absolutely dry. And if someone has 10,000 credits they wish to sell today, I can get you $17.10 for them. There is a huge demand for them at the moment. Now, what would be really interesting when we go through to 2 for 1 and new for used is there's 4.5 million new credits available. Now, I imagine a lot of those companies, with the exception of Tesla, will be holding those credits for their own future use as the limits reduce. But again, on this pricing structure, if Tesla dumped 500,000 credits into the market on a 2 for 1 deal, that would be 1 million used credits. So then the price might really drop. Tesla don't seem to do things which make sense from a New Zealand point of view. And what I mean by that is that a few years ago, when the rebate got introduced and suddenly everyone was getting $8,600 off a new Tesla, Tesla went and reduced the price further by $3,000 within the same week. It seems as though where they were pricing the vehicles to sell, they weren't really aware of what was happening in our local market. So I imagine if those credits do come to the market, they might just get dumped on the market. They might be already trading them. I had heard that they were offering prices to people, but no one had bought yet. But it's something that if a big player does come in and dump those credits on the market and you are holding them, you may be bought with your pants down.
Yeah, that is the big unknown, is how when we do get the interchangeability, how the new cars are going to operate. There's a view that you look at what they talk about in terms of their model rollouts, and they're sort of moving into hybrids over the next few years. They're looking 2030 to have larger numbers of EVs. So, will they hold their own credits to just help them get through to that period where they can bring in a substantial amount of EVs, or will they unleash them onto the market and completely devalue credits? We can't be too sure, but that's what markets are always about, is you can never be too sure, and you make the best guess based on the information in front of you. So
yeah, all possibilities.
Yeah. And so, speaking of the information in front of us, I think that's been a really fantastic download from Dave about the market and about credits and where they're at the moment. I'd really like to thank him for taking the time to pass on his knowledge to us. This is probably the last via webinar for the year. We will put this up on the YouTube channel over the next couple of weeks and make it available to everyone. But yeah, it's going to be interesting times over the next couple of years. Hopefully, this has helped you with some understanding on how to work with your credits in the market. And yeah, as the last one for the year, I hope everyone has a really good break over Christmas and New Year, and we will come back in the new year with more webinars, giving you the valuable information you need for your businesses in this sector. So thanks again, Dave.
Thank you, Greg. Just Dave at carbontradingcompany.co.nz. Got any suggestions, any ideas, or any conjecture? Throw it at me. I'd love to hear from you.
And thanks to everyone for coming on the call. We'll see you all in 25.
Thank you, Craig.
See you all.